Good evening, ladies and gentlemen. This is Clueless 8 Trading Frank. It's approximately 8:44 p.m., fashionably late New York style, on November 18th, 2018. This is a strategic, and I mean strategic, weekend update webinar. We have, it's holiday week after all. Thanksgiving week coming up. Thanksgiving coming up. So we have two amazingly loyal members. Fantastic people I know personally, PB and Mike, here in attendance, and of course some other members can be floating in at their own time. But of course, the session will be recorded, uploaded to the Clueless 8 Trading brilliant and resourceful YouTube channel, Google YouTube channel, where anybody with the internet connection, which I hope everybody has, because that should be a national right, a birthright for anybody to have an internet connection. I can review any of my strategic precision videos, videocasts as we like to call them, not video blogs, but videocasts as we like to call them, at their own time. Keep in mind, you can scroll back and look at the worst days in the market, best days in the market. Look at the video casts that were done on that particular week or on that particular day, and you can see, you can judge for yourself whether or not I was on the ball or completely off the mark. So I leave that to you guys. Overall, when we look back test our results on both stocks and overall market forecast, which is basically the backdrop that stocks operate in, you will see that there's a very high level of accuracy and performance, generally in the range of about 70% or higher, which in the world of trading and investing is a very high track record. How you guys manage your trades, how you guys navigate all those headwinds and tailwinds, whatever you call it, the black swans and the white swans. We saw a beautiful white swan today out on the lake today. It was up in Jersey, in a snowy covered lake, and there was a white swan. And I said, oh my God. And I thank God for the blessing that he gives us, because it was such an amazing sight. It was far away, and this white thing was moving, and it was a white swan. And my wife looked at it and said, what is that? And I thought, idiot me that I am, she's always a smart one, I thought for a minute that it was a little, little floating ice. But it was a beautiful white swan. And that, ladies and gentlemen, was an inspiration, because it was just a beautiful sight. And that's the type of attitude that all of you need to have when you come into this world of trading and investing. Not with negative, nagging, complaining, excuse-filled attitudes. You have to come in with an attitude every morning, regardless of how bad the futures look. Regardless of how terrible the P&L might look first thing in the morning when the markets open. You have to be determined in your mental framework that you want to make your P&L, you want to make your trading a white swan, not a black swan event where everything that you're doing is unquantifiable. No, everything that you're doing on a tactical basis is quantifiable. Because remember, the mathematical definition, the logical definition of a black swan is that a black swan event is something that is unquantifiable, that you cannot measure the risk quotient of it. Well, come in every day. And I'm not being an evangelist. I'm telling you from my heart is how I approach the markets every single morning that God has given us to earn a living. So enough of the excuses, enough of the negativity, enough of the, oh my God, I'm losing everything. I'm going to cancel the membership. I will never trade again. And just like anything else, humans are fickle. Members will come and go. Standard business procedure. You will be 4 people in the chat room, 1 person in the chat room, maybe 0 person in the chat room. Does that mean that you are not making money? Believe in the white swan of life, and that is your confidence. That regardless of what markets are out there, that you have the tools to make money. Might not be every day, might not be a couple of days in a row, but then you'll get a big streak on certain things that we are learning and your own feelings on what you're buying, which will work out, and you will get that spurt and you will move with it like a monster. I'm dead serious about what I'm saying, because I'm not some softie who just came about and like, oh, I'm going to give a little, Instagram type of evangelist speech, motivational thing. No, I'm telling you the way I approach the markets, and more importantly, the way I approach life. We all have problems. It doesn't matter whether you have 10 million in the bank, 500 million in the bank, or 10,000 in the bank, or 1,000 in the bank. It doesn't matter. What matters is your mental attitude. And when you look around you, and there's nothing wrong with it, because that's standard procedure, as I like to say, all you see is fear and despair, non-commitment, non-involvement. It's like that old story about this kid who, two little kids, where one said, well, the father said, I have a, actually, I missed that because I never say it right. And well, I'll mention it one of the times. So I do apologize for that. It's about the horse in the barn, and one says there must be something in there. You always have to look. I don't care, whichever way you guys deal with your life or not, but you have to look at the market as a glass half full. Not being idiotic about it, but you have to look at the market which is glass half full. And there are enough economic, political reasons why the market is a glass half full instead of a glass half empty. So, enough of my evangelist talk, enough of my motivation, enough of my belief and faith in God, in what we do. Let's hit the charts. All right, guys, this Thanksgiving week, lots to give thanks about. You have a roof over your head. You have food on your table. Hopefully you help others who are in need. You are sitting here listening in high technology, audio on a webinar. You have some wheels that you can drive on. You can go to Walmart and buy the basics. So freaking what are we complaining about? So let's get up and make some real money this week. All right? We need to put our mental cojones in play. Enough of the fear, enough of the trepidation, enough of the, oh my God, this market's going to crash every 2 minutes. Enough of, President Trump is going to completely destroy America because he's playing hardball with China, which a lot of the times I don't agree with certain things. You guys know that? Enough of that crap. Do some trades, make some money, focus on the tactical part, which will remove a lot of the emotion. And I was watching this movie after a long time. I actually watched a movie that I really loved. It's called American Assassin. No, it's not about a psycho killer from the Midwest or New York going out there killing people. It's about a average American guy, young guy, who went after some of the most vicious terrorist groups in the Middle East, and his involvement with the CIA. It's not a true story, but boy, I loved the movie. It was amazing. And you know what was the key factor on the guy who was basically his trainer, which was Michael Keaton? I don't know if any of you ever saw that movie. His trainer was this ex-Marine, hardcore. Michael Keaton played the part amazingly. And you know what he kept on talking about? Which I just loved. Kid, regardless of what happened. I'm not getting away the movie, but something happened in the first 3 minutes of the movie, which basically changed this kid's life. He had nothing to do with the army. He had nothing to do with being a hardcore sniper, assassin, nothing to do with his involvement with the CIA and tracking Middle Eastern terrorists. And this has nothing to do with the Middle East. I'm not picking about one region in the world, okay? So don't take me the wrong way, anyone. So bottom line is, it had to do with the fact that his fiancée was killed during that terrorist raid. So you know what? Michael Keaton, as he's training him hard, watch the movie, American Assassin. I saw it on Comcast, I think it's an HBO movie. He said, keep your emotions out of the game, kid. Every one of us has a sob story. Every one of us wants to revenge what something has been done wrong in our lives. Well, guess what? He goes, when you get into the emotional part of it, you'll never get the bad guy. Well, it's the same thing in frigging trading. Tactical, not emotional trading. Believe in it. It might not work for a while because you're not tactically ready to really trade the charts. But believe me one thing when I tell you that it will fall into place. You all will become a lot more robotic and far less emotional. Watch American Assassin. Marines and the SEALs and the highest level of our elite teams, which we don't even know the names of. One of the biggest aspects of what they teach is not just about using weapons and killing the bad guy, is how to control your mind. Trading is a much tougher business. Trust me when I tell you. Control your emotions, you shall see the results. That's the hardest thing you'll ever do. And most people will fail to control their emotions. It'll always be like, okay, here we go again. Here we go again. Well, here we go again. Still makes money. Be tactically long or short. You can't do it every 5 minutes because that's nuts. I can't even do it. And I got internet speeds of almost 1 gigabit. Thanks to Comcast. I was running at 400 Mbps per second. I'm almost at 1 gigabit. I'm super fast. But doesn't mean that I need to super fast trade. The faster and smaller you trade, the lesser money you're going to make and the more money you'll lose. I'll tell you that right now. Think big. Plan. Sit tight at times when it's the worst. Add cost average times when it's the worst. And you'll see the difference. Yeah, maybe it's going to take a few months. Who the F cares? You will be a warrior. So like Michael Keaton told this kid, an American Assassin, kid, and he played these tapes of his fiancée getting killed, and then he put this thing, and the kid was just losing it, right? He's not a kid, he's like a 20-some-year-old guy, right? And he wasn't mentally trained. He just wanted to go for the revenge. He said, keep it calm, because we don't want to hear sob stories of what might have happened to you, because the world is full of it. So as a trader, no one wants to hear sob stories of what happened to you months ago, years ago, days ago. That's what I tell myself. Don't live your losses. Rejoice in your successes. Learn from your losses. Keep your emotions aside. You'll be a better tactical warrior in life and in trading. All right, guys, let's start. So, on that note, let's start off with the E-minis. This is what we're seeing right now. We're down about 7.5 points. Big deal. This is what we're seeing. Remember, it's not the numbers, it's the visual structures. This is what we're seeing in the visual structures. And I want to keep this reasonably short that other people can listen to it at their own time without like, here we go again, another 2-hour webinar. This is what we're seeing. We have the inverse head and shoulder still intact. Inverse head and shoulder does not break down till below 2686. And do the math in your head. Every S&P or E-mini point is roughly about 6 or 7 Dow points, right? So if we go from 2735 to 2700, that's roughly where we have the uptrend line here. So we are looking at 35 points multiplied by 6. 6,530. So, you basically are looking at an average number, if you look at the higher number, of 245 points. And that is okay. It'll still be in an uptrend. Think tactical, not emotional. Doesn't mean you got to hold everything all the way down here. You can do intraday shorts. You can go you can do overnight shorts. That's fine. Some of our members they've made some money. But remember, you got to be quick on those things. Now, one quick comment. We're short. We're doing fine. We're up about 30, 40% on the short, on the pullback on Friday. Pulled beautiful technical setup. I'm showing the numbers. Boom. All of a sudden, the market goes up 150 points because President Trump comments at a press conference that, hey, China's ready to do a deal. I'm like, whoops, my head spun. Nothing new. That is the danger of being too short. So, intraday even, this is a highly coil spring market, guys. Okay? So, majority are bearish. Traders, retail traders are almost non-existent. Everybody's shit scared of the market. It is a coil spring. It's a contrarian buy signal in between specific levels. We are not in a bear market. We are not, in my opinion, going into a bear market. We are bear markets across the board on individual stocks which are down 15, 20, 25%, and nobody wants to touch them. Okay? It's not the first time it's happened. We have high levels of fear and despair. I am not a dogmatically bullish guy. I am certainly not dogmatically bearish. Remember the black swan we talked about. Remember the white swan that I saw this afternoon. Nobody even knows what a white swan looks like. Like what might go right. Everybody knows what can go wrong. Ask yourself in the mirror. So, looking at this here, the inverse head and shoulder is still broadly intact with the first neckline at the 200-day moving average at 27.65, which is a good 30 points from here, multiplied by the factor of 7, roughly 210 points in the Dow. That's the first neckline. The real neckline comes into play, which breaks this massive downtrend from the peak of October. Right when we peaked. We peaked in the double top was created in October and on September 21st. Bear with me one second. And so that's the real neckline. Forget about that neckline. That neckline also happens to be, this is 2018. Let me just zoom in. This is 2018. Right there. Start of January 2nd. The pattern's quite similar. Just because it's similar doesn't mean it's going to happen exactly on the same time frame and exact framework. But it has a high chance of happening. And the high chance of happening is this. We have a massive technical damage that happened in the market when the market crashed, back and forth, of course, all the way from October 3rd till October 29th. Overall. I'm talking overall, right? This is what we did. Now, we are attempting this. First level of move is basically the 200-day moving average. The downtrend line, which is slightly above that, which is around 288 for the 150-day moving average. This magenta line. The sharply downward sloping 50-day moving average is at 2817, ladies and gentlemen. 2817. That's a long way off. So the most bullish case scenario that we get some sort of a framework for a deal. We get all kinds of sweet talk coming out of the EU, Brexit. Theresa May basically manages to, doesn't get her butt kicked and thrown out. And she basically manages to convince the UK Parliament that, because Brexit is a big component of global markets. China stabilizes on their growth rate. They're doing a lot of stimulus, all that stuff. The most that I can see from a heavy bullish standpoint is 2813. So we do 2735. Bear with me one second. 2735, 2813. That's 78 points times 7 So the most that I can think of is a 540, 500 and change the pen color, a 550 or so, 546 point run up towards the 50-day moving average and possibly the peak, which was 28.24, where we already went to, which I forecasted off the lows. So that's what I'm mostly looking at. After that, we get another pullback, and if pattern continues, we get higher. But the most that we can get out of a series of good news overall, globally and internally in the US, or is a 550 point move. That's the bullish picture. The downward picture, we already know. Each of these levels are specified clearly on my charts. No reason to repeat themselves. We have a uptrend line retest at around 26.75, 26.88, blah, blah, blah. No one wants to hear numbers on it, you know. I know how people's minds work, all right? People would rather hear me being Joel Osteen and talking about white swans and how your life should improve than talking about S&P E-mini numbers. All right. On that note, look at the internals. Internals are looking great. This is a large positive divergence despite the fact that we were falling so hard. This is looking good. Let's look at the McClellan oscillator. That is still on an upward trend. So all the internals are good on the daily charts. And at this point, the most we can get out is the 200-day moving average, which is 27.65. That's 30 points higher, multiplied by the factor of 7, roughly about 210 points on the Dow. We might get that this week going into Thanksgiving. Now, one of the things I'm noticing is the 5-day moving average, which is a very important indicator for traders, whether they're active, intraday, or swing, is starting to turn a bit. Remember, these are just nosediving. These are cliff diving, 50-day and the 34. And the more they cliff dive, the lower the lower the distance is between where we are and where we kiss their back end. Right? So in other words, it's getting tighter and tighter how far the markets can move. So at this point in time, the 200-day moving average is, if I want to be exact, is 27.63 on the E-minis. End of story. These are cooperating. There were net 2 days of net buying on the E-minis. Remember, these are the forward-looking players. There was 1, 2, 3, 4, 5 days of capitulative, accelerated selling. Look at that. You have to look at the volume candles. Accelerated selling, 2 days of buying. Internals are somewhat cooperating. That's the reason why the drops get absorbed and the market tends to go higher after the drops during the day. And this is overall looking somewhat positive. These are extremely volatile markets, guys. These are tactical markets driven by machines. So you have to be a bit of a machine to trade these markets. It's not rocket science. Let's move on. Now, what I'm going to do right now is I'm going to walk you guys through backwards from the bigger picture to the short-term picture. Fair enough? Any quick questions before I move further? I don't care if it's about the white swan and where we went to or about charts. Any questions? Yes, no? Can anyone hear us? You feel free to type in if you know. Am I connected? You guys can hear me? Test. Can you guys hear me? No questions. Thanks, PB, because I wasn't sure if I was getting through. Okay. Thank you, Mary. Okay. Sounds good. All right, give me a second. Okay, so let's start off. So here is my quick read on the monthly charts. These are long-term forecasts. This is the monthly charts on the E-mini futures, same crap market. This is what it's looking like. It's looking like we will. I mean, if you look at the pure technical aspect of it, I'm going to start off with the candles first and then the internals. Let me just Squeeze this. So if you look at the candles, there's still a lot of downward pressure. This is still an inverted hammer, even though the buyers are starting to come in. So what we are looking at from an uptrend line going back to the lows of February of 2016. 2016, ladies and gentlemen, this was when you were more than 2.5 years younger. I certainly have more energy than what I had in 2016. Thank God. The markets energize me. The more hard I have to work for all you guys, for myself, then it energizes me more. Believe me, I've never been a quitter, and I will never be a quitter. And when traders give up because they don't even try that hard to even try to understand what's going on, I just find it very sad. I find it very, very sad. So anyway, that's each to its own. So saying all that is, let me get this. Choose the pen color, choose my blue. This is your big, if you want to look at it, this was a big run. This is a big bullish consolidation flag. Just like that, and then it kind of moves this way. That's a bull flag. We are in a monthly bull flag pattern. So, bull flag pattern, standard technical, analysis. So here's your bottom on November again. November of 2016. The election, Donald J. Trump, President of the United States of America. Okay, so my fellow New Yorker, so that no one thought it would be president. I knew he would be, believe me. So anyway, so saying all that is, this is your double bottom here, and then we have a powerful move overall. And then this is where we are right now. So if we look at it in a very simplistic way, where the lows, where the big buy opportunity comes in, where you can sit and say, okay, I'm swinging this. I don't care what happens every 15 minutes. I don't care about Frank and Clueless Trading's 5-minute stochastics and 1 hour stochastic resets and stuff. I'm just going to sit there, put some money in. I'm going to let the market do its job. Well, in that case, this was one of the points. This was back in, look at this huge hammer candle. This was back in February, right? Another one was back on March. Another one was back in April 2nd. I've explained all this stuff before, but I'm showing you a different perspective right now. Another one was close to where we are right now, which was the beginning of May. Another one was right here where we kissed the bottom of this big bull flag where everybody gave up. We didn't. We bought. And that was back on, what date was this? 1 sec. So that was the beginning of October. And this is where we are right now. So if you want to get microscopic on a monthly basis and say, okay, what would be the ultimate tactical perfect moment? Well, the ultimate tactical perfect moment, if you want to be purely technical, is going to be 2634. Look at that on the right, which is basically this uptrend line, which I'm going to enhance so people can see it more. There we go. Make this a little darker. There we go. So would be the retest of this uptrend line, which is 2634, and that is 100 points. 100 points from where we are right now. That's roughly 600 to 700 points lower than we are right now. If we get it within 2 hours, hands down, frigging buy the market, because within the next 24 hours, we're going to get a 300-point rally. Remember, every time we have a flash crash or every time we get a flash rally, it's a 50% retracement level that I've shown on my fibs, right? 50% retracement. The market technically resets 50%. Market goes up 300 points, it's going to give back 150 within the next 24 to 48 hours. Market goes down 600 points, within the next 24 to 48 hours, it's going to gain back about 300 points. Generally, the 50% Fibonacci magnet, and if you don't ask me why it works, ask Mr. Fibonacci, Google him. He's a great Italian mathematician, okay, is the way it works. So this would be a primal, a beautiful buying opportunity. And of course, if you look at the bull flag bottom on this end, right? Remember, this was a bull flag. This is what we're doing right now. Because always have to understand the bigger picture so that your short-term extreme structured volatility that's created by machines, created by the big investment bank, created by certain hedge funds, don't mess you guys up in a big way. You don't all get like superbly bearish that some people do. Don't have to get superbly bullish either. Just be superbly tactically normal. How about that? So then that would be that the lower end would be 2619. Call it 2600. Call it 2600. 2600 from here is roughly about 135 points. 133 points times 7. That's a drop of 931 points if we go from here to test the lows. Remember, when we get to the bottom end of this bull consolidation channel, there's always some slippage. That slippage might bring you down to the February lows, which would be a historical short-term buying opportunity, and that would be at 2531. Right? 2531, if we break through this, would be roughly about 200 points from here on the E-minis or the S&P. That's about 1,400 points on the Dow. Do I think it happens right away? No. Do I think it happens in January? Yes. Okay? In the meantime, that's your bigger picture. We are in a consolidative, large-scale monthly bull flag. Now, let's take a look at the internals, because that's going to determine a little bit about what happens. The internals on the monthly, that's looking out. Not like what are you going to do this week, not how much money you're going to make over the next couple of weeks. I'm talking the slightly bigger picture. Is still has not reset down here or down here like it did back in 2015. Remember, this is 2015, guys. This is going back. That's the bigger picture. Like when the bears get like super excited. That's the end of the United States of America. We're always going to be at a Cold War, trade war with China. Like, forget it. That is a historical buying opportunity. Historical buying opportunities are missed by not 90%, 99.9999% of Wall Street guys as well as retail investors. I've been there. I know it. I'm no guru. I'm just sharing my experiences. Okay. So those are big historical buying opportunities. I'm not just saying that's what it is. And that would be when we basically get to these levels. Okay. It totally resets. That's your monthly. So we haven't on a longer term basis bottom. Let's look at the Coppock curve. Mr. Coppock, just like Mr. Fibonacci, they don't give a crap about what algos do. They're just showing us the way. It is starting to decelerate. So as the markets basically made a new high, the Coppock curve moved down. Very interesting, right? So on a monthly basis, like a longer term, the market has more to correct. End of story. Let's move on. Let's look at the weekly. The weekly is telling us a different story. On the weekly, I'm going to start from the bottom. Start with Mr. Coppock. I wish I had the opportunity to have a drink with him. Just kidding. All right. So looking at that Coppock curve, looking at 2018, what it's telling me, just by visually looking at it, that on a weekly basis, we are in the process, not yet totally, we're in the process of creating a substantial bottom like we did back in April. Now, we created that Coppock curve bottom in end of April here. That was the double bottom of this move. In the meantime, the Coppock curve was coming down from February, but the markets were going higher overall. Lots of volatility on the weekly charts. Lots of volatility. Exactly what we're going through right now. Exactly what we're going through right now. Yet, the market had an overall trend direction higher. By the time the Coppock gets down here, remember, that's not where the Coppock is right now. Let me remove this so no one gets confused. We are getting there. We are getting there. So if you want to wait out and say, I want to see the Coppock curve all the way down here, well, you're going to miss out, which many of you already have, these type of phenomenal moves, including this massive Chinese firecracker move known as a very powerful, bullish hammer reversal. Chinese firecracker. Boom. Chinatown time. Chinese New Year. Right? Lots of fizzle. Boom. It goes higher. This is worth a lot of money while everyone freaks out. All right? So if we're waiting for nirvana, it'll never come. There will never be a moment, and mark my words, where it's going to be, that's it, that's the ultimate bottom to buy. It might be on the monthly charts like I showed you, which no one will be around to even buy. Believe me when I tell you, because I see the sentiment of traders, members, and the overall sentiment out there. Nobody's really a buyer. All right? Some people don't even bother about the market because the market has become an apathetic. They don't want to look at the market. And that's perfect. We are in a bottoming process. This is exactly what bottoming processes look like. You guys have gone through a whole bunch, but many of you tend to have very short memories. It's called a recency bias. What happened yesterday is the most glaring part of your brain. Well, life doesn't work that way. You have to remember what happened a while ago, and you have to apply that to what will happen now. So, bottom line is, we're there, guys. Short term, we're there. So this might mean that we have the bottoming process of a year-end rally. That's what the daily, weekly is telling us with this very powerful move higher. Now, can we do a retest again of this big, massive 2018 downtrend line and come back again and retest 2,700? Give it to me. Bring it over. Come to daddy. All right? Bring it over. I put out a little video of one of my biggest motivational gurus that I still listen to from years ago, Larry Winget. Listen to him. He'll wake you up, okay? Because he doesn't take crap. It's tough as doorknob. If I told you all of you guys were great, and I tell myself this, it's not like I'm ever criticizing anyone. You guys are, right, yeah, you got to wait out for that moment, like it's very safe. It's all garbage. Gotta make money in the moment. We have stocks which have gone up and hit almost new highs like the Chipotles, the Altas, and all these other stocks. And Tesla's about to make a new high. Okay? But you guys don't even touch them. That's okay. Listen to Larry Winget. I'm going to post him. I love that guy. I'm not here to coddle people. I'm not here to coddle myself. All right. So bottom line is that when these type of things happen and we retest the 2018 break-even level, right now showing around 2681 on this is the actual S&P 500, and the hammer reversal off this big, massive downtrend line that is around 2700. Well, I issue buy alerts big time. You guys do what you need to do. All right? Those are the short-term white swan perfect moments. Do what you need to do. Big money's made. But most people just miss out over and over again. Then they, well, I don't want to get in there. Then they basically, what's the word I'm looking for? Satisfy their regret by saying, there's always a next time. There is never a next time, guys. It's always now, at the moment. Carpe diem. Seize the moment. Because the next time comes and goes, and you still do the same thing. So how does it next time? Think about it for a minute. So, technical stuff. No psychological stuff again. I mean, motivational stuff again. Okay, forget it. Not that anyone's getting motivated, but hey, these are the truth. These are the facts. And they don't feel good. So, bottom line is, buy these big hammer reversals. Doesn't mean we're not going to pull back a little bit. Futures are down about 9.25. We'll open down a little bit. Doesn't matter. Look at the bigger structural picture and do what you need to do. Intraday, to make a lot of money, trading a lot of individual stocks, SPYs, SPX. If you want to basically put some money away and say, okay, I'm going to be buying this all the way out to, and you don't have to go out too many months because we're going to have some big volatility in January. Let's say you want to buy it a couple of weeks out. Then this is the real picture. Far better than any other frigging analyst report that you're going to read from anyone in Wall Street. And I am the ex-Wall Street blood. Trust me. Okay? Oh, this analyst said this is going to happen. Yeah, good luck. There's only a few that I listen to. Not that I ever listen to anybody, but I'm just saying the few that I actually read. So, saying all that, there's your uptrend line. So if you want to draw this line here, that's doing it in front of you guys. This is your mental check right there. So even if we pull back and retest 2710, retest its downtrend line, we're good to go. We're good to go. What's your upside? We know what the upside is. It's not going to 2875. I don't think so. Who knows? We might. If we do cut any type of reasonably solid framework, not a deal, a framework with Xi Jinping, President Trump does, and lessening of tensions. Because 1 minute, Trump's, Donald saying, hey, we're not ready to do a deal. We're doing boom, the market goes up 200 points and ends the day well. And then Mike Pence over the weekend at the APEC Summit, Asia Pacific Summit, says, no way, we're going to basically just go nuts on them if they don't, acquiesce to the 142 demands that we have made. So there's always going to be that type of stuff. I'd rather give a lot more credence to what good old Donald says directly off the cuff, because he is Mr. Off the Cuff, right? Than what our Vice President Mike Pence said. So I still think that, from psychologically speaking, he's in a mind to work out a solid framework where we can move forward. If we get those 25% tariffs in January, expect the market to correct all the way down to the 2,500 plus level. That's just simple as that. That's going to hurt American companies huge. It's going to kill the Chinese markets, and they have to buckle first. If it's a game of who gets pinned down first, the Chinese are getting pinned down, at least from a stock market perspective. But they're also very resilient for reasons I've explained before in other webinars, and they also can stimulate their economy tremendously by cutting taxes, income taxes. They were talking about it over the weekend, and doing all kinds of stuff, which would be very stimulative for the Chinese economy. In fact, Chinese consumers and business guys would love it. This is their chance of getting a big tax break, capital gains break, and all that stuff, right? Cheap money and things like that. They might cut interest rates more. So saying all that, this is looking overall positive. The bullish scenario is up there on the 2820 level. So the weekly is looking okay. This is almost bottoming, because by the time it bottoms here, the last thing I'll say here, please guys, listen carefully to what I say. Please. If it gets down here, it will still be trending higher, because by the time it gets down here, and these are weekly charts, so this will take a couple of weeks, week or two, we might be creating a double bottom, or at least coming down to the 2700, 2690 level, and then it goes, okay? So I'm going to be showing this chart almost every day at the end of the day, the weekly. All right? Good. Now, next is the daily. A lot more noise. Remember, the world is full of noise. Honking cars, people screaming in traffic, somebody's just like swearing at somebody else, some people saying nice things to each other. It's like when I walk into a restaurant. We went to a great Chinese restaurant today, all the way up in North Jersey, that my wife found. She goes, you know what, this place, this is near the place that we went to, with the dogs and stuff. Beautiful, beautiful area. Absolutely pristine, where I saw the white swan, by the way. So, on that lake. And it's still snow covered and stuff, because where I am, right on the waterfront here in Jersey City, overlooking New York City, there is no snow, right? Temperatures are higher. So this what was I talking about? So this Chinese restaurant, and gee, I just lost my thought. There's going to be an interesting story. Well, I'll come back to it. Come back to it when. Oh yeah, this is what I was going to say. So when I got up there was so little noise everywhere. It was great food. We came out, and then we drove over to this beautiful area with the lake and stuff, and there was very little noise. And I'm not a meditative type of person, okay? I meditate, I pray, um, and you know, I am grateful. It's called practicing mindfulness, where everything that you have, you're grateful for. Everything, including you can speak, your food on your plate, you can move your hands, you can move your mouth saying buy, sell. You can find an options table. I'm not kidding. It's called mindfulness. Be thankful. Because there are many people out there who don't have the resource or capability to do it, or maybe they're physically unable to do it. Think about that for a minute. I know it's a little bit over some people's head, but I don't care. All right? So it was so quiet out there. And it just opens up your mind. And you look at things more clearly. Well, that as we zoom into more the daily charts, there's so much noise. So much noise. The bars get heavier. The patterns get heavier. And everything's going on at breakneck speed. So this is your daily chart. So let's try to decipher through the noise. This is the noise of 2018, ladies and gentlemen. This is the noise of 2018. Everyone's super happy. Chat rooms across the board, not just ours, packed with people. Then comes the crash. I'm giving you the broader picture, not what we did in between. And I was just like, oh my God, it's the end of the world. Well, the world didn't end. Bang, it goes higher. Excitement goes up a bit. Bang, it comes lower. All patterns. Goes higher. Then does another double bottom. Not a single peep in sight. Human behavior never changes. Never. Trust me. That's why it's so easy for me to read what traders are doing and what they're not doing and how they're feeling. So, and then comes a powerful rally in between these type of moves, right? It never goes up in a straight line. Boom, bullish flags, cup and handles, breakouts, multiple cup and handle breakouts, right? But all overall bullish. Up, up, boom, boom, boom. And through all this, what happened here was so tragic. This was like a mini 2008, 2009 for traders. It's just like, oh my God, this is it. Market's like done. So traders and investors take out billions and billions of dollars away from their funds. Traders are just crap scared. Some of them are still active, but most of them are just not in existence. The chat rooms will never fill up again with any type of kaboom moments. Yet there are so many kaboom moments that are happening across the board. But there is no kaboom moment happening with retail traders. The chat rooms are desolate. Guys, that's called the bottoming process. All right? Trust me when I tell you. And it doesn't mean other traders not doing well. There's so many other traders who are too busy to come in the chat rooms and stuff. But I'm just giving you the general idea. I can feel the temperature of traders and investors from years of doing this, of dealing with people. Okay? I've dealt with more institutions and high net worth clients than you guys can ever even fathom. And it's always the same. So, because market wisdom is very different than business wisdom of a successful businessman or a successful career person. That's why doctors in general, not that I get sued by any doctors, are the worst investors in the world. My parents were doctors. They're really bad investors. God bless their soul, by the way. All right? So, saying all that, and the other ones are engineers. They think they know it all. Tech guys are actually really bad investors, believe it or not, because they just, everything has to fit perfectly. Well, it doesn't. All right. So looking at this daily picture here, lots of noise, but we can still see the patterns. I drew this weeks ago. And if you follow the charts overall, you'll see that it's doing exactly what I said it was going to do. We were going to come back, retest this. Remember, this is that massive macro downtrend line. And guess what? Retested it once, retested it twice, retested it 1, 2, 3, 4 times. Pretty good. Can it do it again? Sure it can. Sure it can. But if you just look at a quick snapshot, guys, I think you might agree with me. Futures are down 11, by the way, right now. End of the world. And this is actual S&P 500 we're looking at. You can still see the pattern in place. The pattern breaks completely below the 2682 level, in which case we bring the prospect of a wide 2600 retest. That means if we break the 2682 level and with some sort of force, meaning this type of breadth thrust on the upside or downside, right? Remember, each of these candles, that fat is billions and billions of dollars, $1 trillion. So bottom line is that that if this breaks the 2682 level with a very massive breakage, something like this, don't be a hero. You can rest assured we're going to test 2600 real fast. So 2600 from here is 131 points. Multiplied by 7, you are looking at roughly 917 points. Can that happen? Sure it can. Sure it can. I rely on charts, not just watching prices flickering around like monkeys on crack. So chart-wise, this is what it's still looking like. Just the way these arrows are. Maybe we'll pull back a little bit. Don't know what's going to happen after that, but it still looks like the market wants to get up and complete this pattern, which is in that 2800 level. Just the way I said it would do here, it does it again. Now, that's the daily picture. Technically, still looking, let's say pulls back a little bit, still looking like it wants to get here. That's the daily. Now, let's take a look at the internals. We already covered the internals on the weekly very well. So let's take a look at the internals, guys. Oops. That's a line. Hold on. I'm trying to get this bigger. Okay, so here's your internals. Internals are mixed on the daily, like I kept on saying. So at this point, we need, if on the long side, we need the stows to continue turning higher. If the stows come and retest the 20 level again, which is the RSI number, these are huge buying opportunities. And if we come down and retest, let's say 2682, which is the break-even level for 2018, for 2018, the year 2018, this is the break-even level. Remember, that's why this line is drawn. Or this big downtrend line. We will, at that point, attempt to retest these lows. What happens when we retest these lows? We inevitably get a short-term bounce. Now, here's the interesting part. This might happen. Don't know if it's going to happen this week. It's Thanksgiving week. It's a shortened week. We have a half day on Friday. So I'm going to be around. And it's so it's going to be one of those, like, light weeks and stuff. But it's never light because the machines will keep on moving. So it can be like very low volume, and ECNBC is like, oh, it's a low volume stuff. It doesn't matter because prices will be moving fast and furious. So saying all that, if we close the gap, remember there's a gap here. Let me clean this. There's a gap here. That lower gap is the break-even 2018 level, which is 2682. See that? That's a gap. The upper end of the gap is, look on the numbers on the right, 2706. Not the end of the world. So if we do this, let's say, close the gap, we will create a quick push down to the deep oversold level, which will create, remember, we're coming down here, a positive divergence. We will create a uptrend line intact. The market's bounce from here, let's say. Yet the internals will come down to the same levels when the market was far below at 2600. So if we come down 2700 and hold it and bounce again off this downtrend line, we create a major positive divergence, because what's going to happen is we're going to create a higher low on prices, yet we're going to retest the same lower lows on the stochastics. That will be a major positive divergence, and please, for God's sakes, take advantage of it. Please. Does everyone understand what I just said? Because I don't want to keep on explaining this all night. If we come down and retest the 2683 level, which is the lower end of the gap, which we've retested twice, we will reset here, which will create a higher low on the prices, same lower low, and a double bottom, major double bottom. I'd actually like this to happen. A major double bottom on the daily, which means we're going to spring forward real fast. We're going to spring forward real fast, just like that. And that'll be nice. But it's going to start off from these levels. Okay? And that means we would do this. And I'm showing you some serious stuff here, guys. Just when we revisit this and we, ask me this like 2 weeks from now, all right? Because I've done this a lot of times and I've been so right on it. Sometimes I've taken advantage of it so too early and it pisses the crap out of me. Like Larry Winget says, when you get your self-revelation, when you truly become a real person or become a real trader, is when you scream out of your lungs and say, God help me because I am the stupidest person in the world. And believe me, I do that. So if none of you ever done that, that means you're not even close to making the real money for what the stock market can give you. If you're satisfied with your performance, you're a loser. If you're really dissatisfied with your performance, I certainly am, then you're going to be a real winner. Believe me when I tell you, Larry Winget doesn't have to tell you. But like he says, the day of that, when the angels come to you, is the day you basically really scream your lungs out in anger. You don't have to scream. You can mentally scream. You start screaming in the middle of looking at your computer, your kids, or your dog, or your husband, or your wife, or your girlfriend, partner, whatever. We'll be like, what the hell's going on with you? Well, do it internally. Gotta get angry at yourself for what you're doing. I am. That's when you reach that level where you say, that's it. That is your psychological bottom. And you print money like nobody's business going forward. Trust me when I tell you. If you're satisfied with what you're doing, measly little money here and there, you're always going to be that little piker running around. You're never going to catch the whale. Believe me, I tell you. You know that. So stop making all that measly excuses to yourself. Oh, I made some money, I didn't lose any. Well, if you're not willing to risk the money to lose, especially when you're playing options, you're never going to make the money. That's why some people say, oh, I don't play the earnings basket. I don't do this. I don't trade these stocks in the crazy days. Okay, great. Did you ever make any real money in your life? Don't think so. So I'm not telling everybody to be a real risk monger, but with tactical charts and stuff, you got to be aggressive at certain points. That's what I'm getting at. All right, move on. Now, let's see what Mr. Coppock is saying. Mr. Coppock is saying, and you guys can look at it yourself, can make these things up, but we want to go higher. Mr. Coppock basically is saying, I want to get up towards the level where we get maximum overbought at around 6, the scale of 6, and we are at 3. And if you look at the trajectory of Mr. Coppock, I gotta really find out who this Mr. Coppock was. Frigging amazing guy. Seriously. So, I mean that. So, this was the ultimate bottom, really, ultimate short-term bottom when we hit this level at 2600. This was Mr. Coppock. Look at my videos from that time, which was not too long ago. Look at my videos from mid-October, October 29th, and you tell me that I don't know what the heck I'm talking about. Please tell me. And so this is where we are. Yes, Barry, it is a nice opportunity. It's not just a nice opportunity, and I say this very nicely. It's a life-changing opportunity where your $1,000 can hit $20,000, where your 1,000 can, or anybody's 1,000, giving you a number, can hit 10,000 or 8,000. Where you make the 400-500%, not just look at the print showing up on the real-time Twitter feed and say, oh man, I didn't catch that 600%. I just made 100%. Not good enough. Because we're talking about certain levels where the markets are beautiful, perfect buying opportunities. So for everybody who missed that, Like I said before, we will get another chance, and these are the chances that we are getting. Will we get another really big chance where the Coppock comes down here? I believe so, but I don't think it's going to happen now. We could if they get into a fisticuff fight on the G20 meeting on November 29, and Donald just goes nuts tweeting, and Xi Jinping basically is a very serious, he's like the real, tough. He's a very tough guy. So bottom line is, he basically just he doesn't tweet. So he just basically says in his comment, I'm sorry, but I can't deal with President Trump. So yeah, we're gonna frigging nosedive all the way down here. Okay? Of course we'll drop 2,000 points real easy. Real easy. So bottom line is that that this is where we are. It's telling us we want to go higher. And what is that higher? Just a little bit higher. What's a little bit higher? A couple hundred points. What does that mean for our stocks? Same range levels that I keep on showing, all these different stocks. Yeah. And once we get up there, everyone's going to be very happy. CNBC, Fox Financial News, Bloomberg, other publications. Oh, looks like we're out of the woods. The minute they frigging say we're out of the woods, frigging sell the market. When they say, are we safe yet? Buy the market. There's no safe and out of the woods crap. It's all about tactical trading. By the time they say it's out of the woods, Coppock is going to be at 6. Stochastic is going to be way overbought. McClellan Oscillator is going to be way overbought. And we're going to get a big fat correction. Okay? That's just the way it goes. So right now, it looks like it wants to move higher. That means we have a shot. Let me try to close these. Why is this so sticky? Hold on. There we go. There we go. Let's clean this out. And the reason I'm explaining these big backdrops is because all the stocks basically will do. If you want to, like I said, you don't have to worry about individuals. So you can just do the SPYs, the SPX, and play this whole scenario that I laid out. Because we're talking about the E-minis and the SPYs here, right? Play the Boeings. Boeing is the ultimate harbinger, proxy for the markets. So the gap fills here at 2,800, 2,780. Could be the tops, 2,040 if things really go well. And that's why these arrows are here. Let's take a look at the short-term gratification, the recency bias chart, which we do extremely well on. Extremely well on. Now remember, you can skin the cat both ways. You can do some quick scalp trades on the short side. But one thing I can assure you, and I've seen this happen with a lot of traders. One second, please. Let's have some water. These webinars aren't that easy on my palate, even though, remember, I'm unscripted. I'm sitting here, moving my arms, and just doing it. So bottom line is, these Fibonacci retracements, this was a 50 Fibonacci, and guess what we did? We went above that, we hit the 61.8, and then we pulled back. I see patterns. You guys see patterns? This is the big hammer Chinese firecracker reversal, which needed to be bought hands down. So this is your short-term map. Lots of noise, lots of candles, 1 hour charts. I'm not even going to the 15 and the 5 minutes, but you can see a pattern. So if the pattern works out for the bulls, this is what it looks like. Choose pen color. Big one. First stop, second stop. Pattern completion, short term. That's it. 28.17 matches everything that we talked about before. Lower end, pull back, close the gap again at 26.85. We just talked about it. Remember, we talked 26.82 just a minute ago on the E-minis as a major level, which is a 200-day moving average. Well, 26.85 is roughly the moving average on the overall market. Can this happen? Sure. Will it completely break down below that? Sure. I gave you the circumstances that those can happen. And if it does get down to the 26.3 level, we have created one heck of a, excuse my French, mofo, New York style, massive W formation, short term. If we break above 28.17, 2820. That means the intermediate downtrend has been broken. There's going to be fast and furious. And you know how things move fast and furious. We're going to head up real fast towards 2900. And that is only if all the ducks line up, all the white swans line up. I'm not even expecting that. I'm very skeptical about what's going to happen because the monthly charts are showing we are going to dip further. I am just expecting a move if things go between where we are right now, roughly about 40 points. So give or take about 250 to 300 points max before we get slammed again. Now, I show many different powerful indicators such as the VIX and all that stuff, which matches in with the 1 hour. I keep on showing the 1 hour VIX, as you guys know, which keeps me in balance. So guys, that's it. I don't want to overthink things. Keeping a close eye on the charts. We'll have special situations on individual stocks which have nothing to do with the market. There's a whole bunch of stuff going on this week. And while I have my chance, and I know I showed it, let me just quickly show it. All right. Here's your swing 533. We are turning, which is a positive. We did get that hammer reversal on the 29th, which I said buy the market. If you remember, go listen to my videos. So bottom line is that the best we can do is we come up here, which is 2820. We have the pivot here at the 50% level, which is at 2760. And remember, that falls in close to where the 200-day moving average is. So in simplistic term, if we break above over the 200-day moving average, which is around 2766, we are going to fly fast towards 2780, 2800. This was oversold. That's why we got the bounce. This, it gets very overbought around 90. So if I see it crossing over going towards 90, curb your enthusiasm. Remember the show? All right? Curb your exuberance. Because at that point, the market is going to reset again. And that would be in this range. Nothing to do with excitement and joy. Here's what I like to practice in my life. In the times of the most massive despair and sorrow, stay calm. Stay calm. Do what's necessary to fix it. Because as long as you're living, as long as God is giving you the breath to wake up the next morning, you're going to fix it. And at the time of extreme exuberance where you made a lot of money or something really great happened in your life, stay calm. Stay calm. Think about it for a minute. That's when you know you've reached somewhere from a psychological and mental state. 99.9% of people can't do that. They get manic depressive, very happy, very sad. And the markets are an exact visual representation, a monetary representation of that feeling. Manic depressive. Why not just stay calm? Think. Take a walk. Think. So, this is where we are. Gets overbought, we sell. This is looking good. Now, from a psychological perspective, does our president, Donald Trump, want our ultimate Christmas and Thanksgiving to be completely ruined by massive crashes in the market? No. The Democrats have already gained some substantial ground in Congress. He doesn't need to give them more ammo from an opposition party standpoint to fight and say, hey, great, your policies are working great, right? Sarcastically speaking. Look what the markets are doing. No, I don't think he wants that. Think. I don't care what the frigging bears say. I don't say, what Soros says, who hates who. I don't care. That's not the way it works. Do you think Jerome Powell is going to completely, because that's really the big bet. That's the big question. Will Jerome Powell, our Federal Reserve Chairman, completely doom the U.S. economy? No, I don't think he will. Because we are all, regardless of stripes, colors, we are patriots. We're Americans. Never forget that. Okay? And none of us want the demise of America. A lot of shorts do. They want the market to crash 5,000 points. What's that going to do with mom and pop and their 401ks and their feelings about spending and buying something for their grandkids for the holidays? What's that going to do for housing prices? You think Jerome Powell wakes up every morning and says, that's it, I'm going to raise rates to the point where housing prices are going to completely collapse? Because that's the first thing that's getting hit, right? We want the whole world to fall because I just want to stick to my strict textbook. Some people say, yes, that's the way he is. No, I don't think so. Think, guys. They're patriots. They want to help the U.S. economy grow. Yes, they're nerdy. Yes, they don't always want to be catering to Wall Street whims. And I think they're getting the message. And if you read in between the lines what Cordero said, that's his name? No, Quarles, the vice chairman of the Fed, on the interview, they're accepting it. Read in between the lines. Most people out there, most traders, first of all, don't even know how to freaking speak English, okay? So forget about them understanding what the Fed is saying. I'm dead serious. Am I looking down on people? Yeah, I'm looking down on a lot of traders. I come from Wall Street, all right? I have a right to look down on people, look up to people. Most traders have no freaking clue what they're reading. So it's dead serious. And forget about the average American who doesn't even know how the Fed speak is, as the Federal Reserve speak, all right? We're all need to educate ourselves, sarcastically speaking. So don't come and tell me that this is what the Fed said they were going to do. No, you got to read in between the lines. Peel the onion because the real truth lies at the 6th layer. In my opinion, and I've gone through enough of these, okay? They've always criticized the Fed for doing what they did. Every time, from Janet Yellen to Greenspan, they're all nemesis because the Wall Street doesn't like something, the government doesn't like something. Overall, they've done okay. They've learned from their mistakes too. I don't think they're automated robots. So I'm not supporting everything that they do. And who the hell am I? I'm just a puny little guy out there sustaining my thoughts. But they are not in the business of destroying America and the rest of the world because of their textbook way of they do things. So swear as much as you want at Powell and anything, but it's okay, guys. He's not the Terminator, just the way as some of the media would like you to think. Okay, last point. This is a damn good webinar, I'll tell you that. All right, this is where we are. This is looking like it's trying to bottom. It might turn all of a sudden like that. It's done that before. Look here, back in August. Looks like everything was going to fall apart and the full stocks just turn around and ratchet and boom. These type of moves like this one, which most of you guys missed because all of you guys were just doing 5-minute trades. A lot of you, okay? From October, I kept on saying positive divergence, huge moves. Dead scared because you guys are not following the charts. Well, good for you. All right? Actually, really terrible for you guys. So bottom line is, when you get that, these are big moves. We're not there. We are here right now. So despite this is starting to curl down. So to me, looking at it from all the things that I talked about, could be a bull flag. Remember, you can do bull flags and stuff on indicators too. This could be a bull flag that turns higher. This needs to turn higher. Or if it goes lower, well, that means we're going to retest the 2650, 2680 level, and you want to buy hands down because you're going to get a big short-term rally. We're going to be watching this very carefully. This is your New York Stock Exchange McClellan oscillator, known as the NYMO. This, after all this stuff, it is here. Upper end of the NYMO is around 73. I told you it was going to bounce like a mofo, and it did. Big time money made overall. Some of you did tremendously well. Some of you just sat around like I don't know what. And it's okay. I don't want to even go there. So bottom line is that could we have done better? Absolutely. Absolutely. But intraday volatility, the devils with the monkeys on crack, the way the machines move back and forth, keep us on our toes so much that sometimes we're dancing backwards instead of dancing forward. And that's the truth. That's the reason why we don't pile up everything and say, that's it, I'm putting in most of my trading capital because I know that the market's going to go higher because everything that has shown from these levels always go higher, but we don't tend not to do that. Do I get pissed at myself for that? Absolutely. Believe me. Some of you would know, and anybody would know what the feel of the big money. And remember, these rallies start from nowhere, but that's why the internals tell us whether or not they're going to start from somewhere or not. So saying all that, this is the last thing I'm going to talk about is this is where we are right now. This is not Armageddon. We tested the pivot. That's the bottom. That's the mid Bollinger. That's the bottom line here. You can see that bottom dotted line. We tested the thing. This is still moving higher. This is still moving higher. We want the McClellan oscillator to head towards overbought levels again. In my opinion, I don't think it's going to hit that 72 surge. It will probably hit around 70.38, which is the R1. And don't worry about this stuff because I'll show it every other night or every other webinar, which I do, the Wednesday evening one I'll do. And so bottom line is, once it gets there, you can rest assured markets will be overbought and we are going to pull back again. That could be the Thanksgiving week play. In the meantime, we would like this to turn. And so far, it's not Armageddon. I like what I'm seeing here. Squint your eyes so you can see it, which is your RSI, which is now kissed the 50 and now starting to turn. It's at 53. I like that. If you enhance this, it looks like this, which is good. That means short-term rally. All right. It's a mixed signal, but overall nothing to get totally alarmed about. And cleaning this out, this blue line here is your moving average, the 50-day moving average on the McClellan 50-day moving average, NYMO, New York Stock Exchange McClellan oscillator 50-day moving average, minus 18. So I watched that line. And of course, when it gets down here, I repeat again, next time we break down here and the market's as ugly, at least on the headline price level, and the McClellan oscillator end of the night is down here, please put some money in there. Don't look at it for the next 5 days. And then you come and tell me you didn't make any money. All right. All right, guys. This was fantastic. I really appreciate your attendance, and I shall see you guys tomorrow. And have a blessed Thanksgiving. And of course, we will be, I will have an active chat room putting out my stuff. More importantly, not the chat room, the private Twitter feed where all the content is delivered. Have a great evening. God bless you all. Thank you for attending.